Hello and welcome to our weekly market roundup, your one-stop source for the latest in global market trends, key economic insights, and top financial news. I'm your host Daniel, bringing you the highlights and the happenings from around the world. It was a choppy week for global markets as investors grappled with fresh U.S. tariff announcements, mixed economic data, and a cautious earnings season. The S&P 500 posted a modest decline of 0.24%, while the Nasdaq fell 0.53% as tech stocks lagged. Meanwhile, gold set another record high above $2,900 USD per ounce, and U.S. Treasury yields declined as investors reassessed economic growth and inflation prospects. Markets slip, then recover some ground. Stocks started the week on a sour note after President Trump announced new 25% tariffs on Mexican and Canadian imports and 10% levies on Chinese goods, effective February 1st. However, a last-minute 30-day delay on Mexico and Canada tariffs helped ease investor concerns. As of Friday, 77% of S&P 500 companies that had reported Q4 earnings beat expectations, with profits growing 16.4% year-over-year, well above the initial 11.9% forecast. The ISM manufacturing PMI rose into expansion territory for the first time since 2022, coming in at 50.5. However, ISM officials warned that tariffs could derail this recovery. The U.S. labor market showed signs of cooling in January as payrolls increased by 143,000, missing expectations of 170,000 and marking a sharp decline from December's 307,000 gain. However, the unemployment rate unexpectedly fell to 4.0% from 4.1%, while job openings dropped to a three-month low of 7.6 million, reinforcing the narrative of a gradually slowing labor market. Wage growth remained steady, but consumer sentiment weakened, with the University of Michigan's index falling to 67.8, its lowest level in 7 months. Stocks climb, despite growth worries. The Stoxx Europe 600 index rose 0.60%, hovering near record levels. Italy's FTSE led the way, climbing 1.60%, while Germany's DAX added 0.25%. The BOE lowered rates by 25 basis points to 4.5%, its third cut since August. However, inflation is still projected to stay above target until 2027, meaning further cuts will be slow and cautious. The annual inflation rate in the Eurozone ticked up to 2.5%, while core inflation held steady at 2.7%. Policymakers attributed the rise to base effects from last year's energy price drop. Germany's factory orders surged 6.9% in December after falling 5.4% in November, though industrial production remained weak, contracting 2.4% for the month. Nikkei 225 drops 2%. Japanese stocks fell as the yen strengthened, weighing on exporters. Bank of Japan officials reinforced expectations for further rate increases, lifting 10-year JGB yields to 1.28%. December saw a sharp rise in nominal wages, but much of the increase was tied to winter bonuses rather than broad salary hikes. Chinese markets rebound. The CSI 300 index gained 1.98%, while Hong Kong's Hang Seng index surged 4.49%, its best week in 4 months. Domestic travel hit a record 501 million trips, a 5.9% increase over last year. Box office sales jumped 18% to $1.3 billion, reflecting strong consumer demand. However, the Caixin Services PMI fell to 51, its lowest level in 4 months, signaling weaker business activity. On Tuesday, February 11th, Federal Reserve Chair Jerome Powell is scheduled to testify before Congress. His insights into the current economic environment and future monetary policy are crucial for understanding the Fed's stance on interest rates and inflation. The January CPI data will be released on Wednesday, February 12th. This report will provide the latest insights into inflation trends, a key factor influencing Federal Reserve policy decisions. On Friday, February 14th, the January retail sales figures will be published, offering a glimpse into consumer spending patterns, a primary driver of the U.S. economy. Eurostat is scheduled to release industrial production figures for December 2024 on Thursday, February 13. This data will shed light on the manufacturing output within the euro area, offering insights into the region's industrial activity. On Thursday, February 13th, the Office for National Statistics, ONS, will publish the preliminary estimate of the UK's GDP for the fourth quarter of 2024. This release provides an early indication of the country's economic performance during that period. On Thursday, February 13th, Japan's PPI data will be released, indicating the average change over time in the selling prices received by domestic producers for their output. On Monday, February 10th, the People's Bank of China is expected to report the total new yuan-denominated loans issued in January, a key indicator of credit expansion. Also on Monday, February 10th, China will release its M2 money supply figures, reflecting the total amount of money in circulation and indicating liquidity conditions. That's a wrap for this week's Market Roundup. Thanks for tuning in. Be sure to subscribe and hit the bell icon to stay updated with the latest market news and analysis. Until next time, stay informed and stay ahead. I'm Daniel, and I'll see you next week.